Money Matters is sponsored by Strategic Wealth Designers.
Let's take a check of the stock markets today. Trading ending just about 20 minutes ago. The Dow Jones down again today, losing more than 220 points. The Nasdaq ending trading in the green, up over 70 points, while the S&P 500 ended about 10 points in the red. Well, today's numbers come after a 600-point loss on Monday.
Fox 59's Angela Ganote sat down with Mike Reeves from Strategic Wealth Designers to discuss why that happened and what it means going forward.
Mike, Monday marked the biggest drop we've seen in more than a month. What made the market fall so hard?
Well, there are three factors that you want to look at as far as yesterday's drop. Number one, Europe, they have a very large technology company out there called SAP. They came out with horrible numbers, and what it kind of signaled would be Europe is having problems growing even with all this stimulus, so that's a concern, growth in Europe. Number two, you've got the coronavirus, right? You've got cases surging right now, and that's creating some concern that we might have to have some shutdown businesses or states or things in the future. That would be a big negative, obviously. And then you got the stimulus. They just can't seem to get that right. They can't seem to get anything done. And that's very important to stock prices right now.
Yeah, let's talk a little bit more about that, because the nation's waiting to see if there's any way that we are going to get another stimulus plan done. How big of an impact is that going to have on investors, whether it passes or not?
It's going to be massive. So if something doesn't happen, which I think is unlikely, but if something doesn't happen, it could be a very large drop in the stock market in a relatively short period of time. And the reason being, we've already had a bunch of businesses fail. Well, you've got a lot, small and large, that are kind of hanging by a thread. So we don't need additional business failures out there. Obviously, we need to keep jobs. Jobs would be in jeopardy if we don't get something done on the stimulus side. So if it doesn't happen, there's going to be some concern. Obviously, if it happens, that should be supportive of stock prices. And if it's actually a really robust bill, sure, that should help stock prices now. But if it's too big, there's going to be concerns about inflation in the future.
Another big story today, the U.S. has a new Supreme Court justice. Could that have any impact on the stock market, and where do things go from here?
It's unlikely that has any impact at all. So, political events that don't directly affect the stock market or the economy, typically stock prices are not going to be affected. I would look for something more of the lines of a contested election where there's squabbling on who won for a while, maybe being an event that's political that could affect the stock market, and that would be additional, uncertainty. The market does not like uncertainty, but the things that you want to follow, if you want to follow stock prices, growth, obviously how we're dealing with the virus, and if we're going to get stimulus. Those are the factors that are going to be driving stock prices in the near term.
All right, Mike, thank you so much. We'll see you next time.
Thank you.
And for more information on this topic or any other money saver, head on over to fox59.com and click on the Strategic Wealth tab.